everyone. My name is Mo Zulfikar, and welcome to another episode of Income Investors. With me today is John Whitefoot. But before we talk about our income idea, I want to let you know that anything you hear in this video is for information and educational purposes only. Nothing in this video should be taken as personalized investment advice. Investing comes with risk. To read more about it, please see the description below. When we looked at Blackstone Minerals LP, traded on New York Stock Exchange under symbol BSM, which is the largest pure play oil and gas mineral and royalty owners in the US back in May, it was trading around $15.81. A lot has changed since then. First, Blackstone units have been rallying higher. On August 10th, they hit an intraday high of $17.76 per unit, their highest intraday trading range this year. This also represents a 12% gain over our May profile price of $15.81. It also has recently declared a second quarter distribution of 47.5 cents per unit, or 11.29% on annual basis. That 47.5 cents payout represents 13% increase over the 42 cents per unit payout in the same period a year ago. John, let me ask this. Why the big gains and strong distribution growth here?
Yeah, thanks, Mo. First, when we last looked at Blackstone Minerals, oil was trading around $70 per barrel. In early August, it was trading at around $85 per barrel. It has since settled in the $80 per barrel range. Second, there are more than enough positive factors that could propel crude to $100 per barrel. OPEC Plus is going to put a huge deficit into the market in the second half of 2023. The Saudis are unlikely to reverse their cuts at $90 or $92 oil. The U.S. administration doesn't have any good options for bringing the price of gasoline down. Moreover, the downside risks are pretty limited so long as OPEC Plus maintains its production limits.
Now, let's dig into the company. What exactly does Blackstone Minerals do?
Yeah, as you noted, Blackstone Minerals LP is the largest pure play oil and gas mineral and royalty owners in the U.S., with assets in over 40 states and 60 production basins, though its diversified asset base is concentrated mainly in the Permian, Haynesville, and Bakken. As a mineral company, it has exposure to oil and gas, but without the hassle of operating costs or capital spending requirements. And thanks to its scale, Blackstone has opportunities to partner with operators to initiate and accelerate drilling and directly benefit from their technological advancements, which helps increase recovery and well economics. And there's plenty of oil and gas reserves to keep its customers happy, though. Estimated proved oil and natural gas reserves at year-end 2022 were 64.1 million barrels of oil equivalent, which is an increase actually of 7% from 59.8 million barrels of oil equivalent at the end of 2021.
All right, John. Oil and gas has been one of the biggest winners over the last few years. How have that impacted earnings of this company?
Yeah, thanks to increasing operational activity, Blackstone was able to report record fourth quarter and 22 financial results. Despite headwinds from weaker natural gas prices, that momentum is actually carried into 2023. So in the second quarter, mineral and royalty production in the first quarter was 33.6 million barrels of oil equivalent per day. The company reported net income of 78.4 million. Distributable cash flow was 103.6 million. That actually represents the fifth consecutive quarter of distributable cash flow above 100 million. And most impressively, the company actually ended the quarter with zero debt and 81 million in cash.
And what about its distribution?
Well, generating lots of cash and having no debt is a good way for any company to help choose its dividend. As you noted earlier, during the second quarter, the company increased its quarterly dividend distribution by 13% year over year to 47.5 cents per unit, or 11.2% on an annual basis. That's more than triple the current U.S. inflation rate and significantly higher than the average yield of the S&P 500, which is a paltry 1.54%.
And how about the BSM units? How are they doing?
Well, industry tailwinds have been helping juice Blackstone's unit price. Since we looked at the company in May, their units have rallied 12%. They've given up a little ground since hitting a new 2023 high in early August, but they're still trading up 17% over the last 6 months and 22% year over year. The big gains by any standards, but the company still has lots of room to run. Wall Street analysts have provided a 12-month median unit target of $20 with a high estimate of $23. Now, that hardly means Blackstone units are going to hit those targets, but if they do, even the median $20 price would put Blackstone well into record territory.
John, thank you so much for your analysis. Just to recap, Blackstone is the largest pure play oil and gas mineral royalty owners in the US. Because of its massive geographic diversity, it's been able to generate serious cash flow, report strong financial results, and a growing ultra-high dividend. In fact, thanks to its cash flow, it has been able to reduce its outstanding debt from $394 million in the fourth quarter of 2019 to zero in the first quarter of 2023. Going forward, Look for Blackstone to benefit from sustained recovery in natural gas and ongoing demand for oil. This should help it continue to deliver solid returns on capital and return strong cash flow to its investor. That's it for today. We'll be back with another video soon. If you want to read what John writes on regular basis, you can head directly to www.incomeinvestors.com. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.